Dundudas. Good morning here. It's about 8:45 a.m. on a great Tuesday right after the July 4th weekend. And, we are having an okay day on metamaterials and, within the range of my prediction and everything. It's great. And the press conference is tonight. But the reason why I'm making this video isn't, specifically about metamaterials. Because, as far as all my prediction goes, more and more people are started treating me like, like I'm a prophet or I know everything. But like a lot of times, like I'm going to be super honest with you guys. Like, you cannot be 100% right all the time, right? I mean, for most of the time you might be right, but a lot of times timing is one of the most important thing in trading stocks, option, or trading futures. And in future, you can probably get in and out in like within 10 minutes, or you're just doing some mild sculpting and everything. And for stocks, you have a longer period of time, and it's easier to predict the price range, but it's harder to predict the spatial analysis, like the time analysis, right? Like, you don't really have a set time frame for when AMC is going to squeeze. I can only give you like a 2 weeks range where, things goes as it is. There's no catastrophic event happening or something bad happen or something really good happen, act like a catalyst, right? And I make some really big mistakes too. For example, I decided to go into this stock, right? So this stock is called GMTX, okay? It's a pharmaceutical sort of all of the therapeutic biomedicine sort of stock, like most of the stock that doesn't make money, right? And then a lot of things I see is you see a huge drop down, and you don't really see a see like a 30% to 40% drop down. And on that day, you also have a news that's saying Russell inclusion, right? Russell inclusion is coming. So then, as a very rational human being, you're gonna be like, oh my god, like because of Russell inclusion, it's gonna probably be higher than when it used to be traded, unless there's a huge problem with the company to justify this huge gap here. It's probably a good buying point. But because it drops so much, so then you're attempting to open up a sort of a mildly large position and maybe leverage your average with options a little bit. This is exactly what I did. And because I think due to legal liability, I cannot show you guys how much I've already lost in the stock already. But right now, I'm probably a bit loaded on the August 20 option. And then those are the ones that are heavily leveraged. Therefore, I'm losing like a couple of $100 there. But, as you know, 567 is literally the lowest point the stock ever gotten for this entire year. So I'm actually pretty positive in terms of, I mean, it's like the lowest it ever got from the when it IPO out. But anyways, this video isn't telling you that on something like it's bad, like I make bad choices. Sometimes I make bad choices, but what you guys have to understand is essentially there are 3 different type of investors in a stock market, right? You have so let's just ditch the institution and retail talk, okay? Let's talk about the 3 different type of investors. So the first type, which is the most general type, is gamblers, okay? And the SEC or the OCC doesn't want anyone to talk about like you treat stock market as a gambling facility, but in reality it is, okay? But disclaimer here, we are not financial advisors. We do not give financial advices. So everything we say on this channel is for shits and giggles only and for entertainment purposes only, okay? And also we are not attorneys, so any of our statement here are not legally bound, and we're just essentially entertainers and everything. So hypothetically, let's just say the entire stock market is a gambling pit, right? And then in every gambling pit, there's going to be a gambling host and there's a pit master. And then for say GMTX, the pit master's average is probably gonna be like somewhere around in the middle of the gap, right? So then on this trade, I have an edge because I understand how much the pit master's average is. But the problem is, for a biomedical or bio device or just the pharmaceutical company, when it drops this much, a lot of people panic sells, and then they don't really, not a lot of people will go in extra depth to really understand what kind of medicine or what kind of therapeutics that they're really go into. Therefore, you see, like when it drops super rapidly. You see, when it drops, there's a spiral effect here, okay? So then in here, what you guys need to learn is a lot of times when stock drops, like you have to understand on like what is your maximum stop loss and what's your maximum leverage here. Okay, and here on 567, I think it's already at one of the lowest point that it can get, right? And then I have an upside actually all the way until 9. So that's why all my option contracts are really weighing the average. So then when it reaches 9, my average is way below. And I take on some option leverage, but not really the real leverage, because you can calculate option leverage. But anyways, we should deviate from the specific stock and talk about like the 3 different type of investors. Okay, so we talk about general gamblers are the one who enter a trade, you follow a lot of trade alerts, and you follow a lot of streamers or YouTubers, or you follow other people's portfolio. Those are the very rudimentary, like the low level gamblers, because their odds is essentially 50-50. If you read this book called, you should go read it, right? I'm not saying a lot of research from that book is correct, but I'm just saying a lot of the concepts and statistical analysis within that book really tells you about the stock market. It's called The Random Walk on Wall Street. Walk on Wall Street, right? So this is one of the must reads if you're trying to get into investing for a long time, because you understand the general market consensus, or general how the market works in terms of the randomness of it. That's why I always say that, don't, like, a lot of times you should form your own opinions. I mean, it's great you're watching our channel because we do very thorough DD, and most of our predictions were right. Let's just say 90% of it right. But on 10% of the time, I could be wrong too. So don't demean it as someone who's like really higher up, even though I have a huge God complex and everything. But at the end of the day, we're still human, okay? I'm human, you're human, so if I am wrong on something, you should correct me, and you should comment down below and say what you think about, the stock, and just be like really truthful, okay? Like when I lose money, I will tell you guys I lose money. When I win money, I will tell you guys when I win a lot of money, right? And so as far as the gambler thing goes, the first type of these investors are gamblers. They're essentially investing in 50-50 trades. They either can lose and they actually can lose, right? And then because they're entering 50-50 trade, their expected upside is actually 0%. It's actually at 0. Because think about it, right? Simple math, 50% you minus $1 plus 50% you win $1, which makes your max expected, right? EV, not electric vehicle, but expected value of your trade at $0, which means it's still a fair bet. But in reality, because you have a pit master, and those guys those guys can be, the MMs, who are the market makers. They could be the holders, the institutional holders, who owns a lot of the shares, and they can manipulate the stock price, right? Or they could be, which the third part of this pit master is actually made out of retail investors. But this situation is really, really rare. And if this situation occurs, usually the stock's probably going to plummet. But I'll explain that. If you guys want me to explain that, the reason why that would happen, comment down below, right? So because you have all the MMs, you have the pit masters, that makes the general gamblers odds actually lower the gamblers odds to a negative, okay? So they're essentially not really entering 50-50 trades anymore. They're entering 40-60 and maybe 30-70 trades. Because why? The MMs, the insider people, they have more leverage, they have more tools, they have more financial derivatives that can help them profit. For you, you're just entering the trade based on, your feelings of this stock, whether it's going to go up or wrong, or, maybe Matt or Trey talk about AMC all the time, and you just happen to be a sub and decide to buy into them, okay? This is what we call the general gamblers. And this is the majority of the market. And you have, the next level is what we call the educated gamblers. Okay, the educated gamblers. So I would consider myself, right, in the educated gamblers. I make predictions. I have a financial background. I have a financial education background. I read a lot of stupid shit. That's probably why I'm still single. And I make statistical analysis, and I sort of execute my trade based on my statistical analysis and based on my DDs. And I hope all of you guys will become this, okay? And then we enter trades that our winning side is at least 60% to a 40%. And we sometimes we go up to 80 and 20, but there's no such thing as 100% winnable trades, okay? That's impossible. Unless you're from the future, you're going to be like, oh my God, 20 years from now, my Amazon is going to be $4,000 and maybe Tesla's going to worth less than $100. Why I said that is not because I know the future, but it's just a general hypothesis. Because if you look at Ford's history, Tesla is essentially repeating Ford's history. But when more and more those manufacturers coming in, and when their autonomous car features are not going to be like the best in the world, when consolidation happens, their stock price tends to drop due to consolidations. But anyways, so what are the third ones? The third ones are what we call the non-gambler machines. Okay, those guys are not necessarily the quants, right? Because quants can lose too, because quants utilize AI and mathematical models. And when there's a big dip, or when there's a big market correction, or when there's a gray rhino effect or a black swan effect, those guys get wiped out instantly. Okay, if you guys want to hear a story of this fund called the Chaos Fund back in 2008, they won about I think they won about 27 million during 06 to 08, and then they basically become a penniless fund by the end of 08's market crisis. Okay, it's a multinational fund, but it's pretty well known within the Asian market because they sort of like pump in fresh blood during when future contracts aren't that popular back in the old days in China, because the Chinese stock market wasn't that booming until like by the end of 2009 and everything. But anyways, so let's go back to the non-gambler gamblers. Okay, so the non-gambler gamblers, essentially they have sort of like they either have an institutional edge, or they have information that we don't know, right? We cannot get those information from just regular DD. Okay, so let me write this non-gambler gamblers. The reason why we call them non-gambler gamblers, they're not gamblers, but why they're gamblers? Because they're gambling on mass psychology here. So this is another level. Okay, eventually, maybe I will reach that level when I have like supreme knowledge of the market. And in order to reach this level, you need at least 20 years of trading experiences. And maybe if you're smart, you can speed it up to 10 years. But it's literally impossible to gain that kind of knowledge and that kind of market insight and that kind of psychological edge over the majority of the market. Literally those people, they're the 1% of the stock market, and they make over 50% return. And those are like the rare unicorn people who understand a lot about the market. And then over the past 20 or 10 years, they've been trading futures, options, stocks, commodities, even crypto, right? They know all of it. They've seen all of it. And then they're literally trading just prey on your psychology at that point, okay? Price point does not matter for those guys anymore, because whenever they enter a trade, they have a huge amount of capital that they can win any single trade as long as they allocate their funds correctly, right? And they're just playing off of your mass psychology here, okay? I think this is it for sort of like a market reflection. The takeaway of this is, we still have a lot of time to learn. And I'm here, I'm young, right? Even though I have a lot of knowledge about the market, I've read a lot of things. My predictions are most likely right, but don't deem me as, someone who's just like so higher up that it is not reachable, or someone you cannot talk to. I'm still a human. Talk to me, ask me questions, correct me when I'm wrong, challenge me, because I love being challenged so I can do more DD, so then, we can be more correct, because we want to grow as a community as a whole, okay? In this video, I just want to let you guys know that, I'm also losing money too. Like, I can't be 100% right? And then I'm telling you guys where I'm losing my money, and hopefully we can learn from my mistakes. But again, for GMTX mistakes, I think by August 20, we're going to see an upside anyways. But it's just an example, okay? And then also, trading is not really like a definite, you don't really have a static, definite P&L, or you don't have a definite sort of like you should see it as a continuation. Like maybe right now you're losing 20% or 10%, you're in red. But your same position might worst 50% up in the next 2 months. So don't be too shallow on your positions. You have to see what other people don't see. You have to see what the time is going to bring you more value. Or, you could be 50% up right now, and in 2 months, you're going to be fucking 70% down, right? That happens in the dot-com boom, right? That also can happen. So that's why every day you have to adapt. Every day you have to adapt new strategies. Every day you have to look at the market and form your own opinion on what is going on. For example, right now you have the OPEC situation, right? I think this is going to be a standoff. But it's in the interest of the entire economy, the entire world to see them not having a standoff. But because I thrive on chaos, that's why I think that's what's going to happen. But hey, I could be wrong too, right? But anyways, this is it for the mid-market reflection slash analysis slash psychology slash theory crafting video. And hopefully, there's not going to be a lot of things to watch in terms of mid-market, so I can go back and finish my AMC video and finish my DT fail FTD video. And we're gonna wait for George's press conference because all eyes is gonna be on George. Without further ado, this is it for this video. And for all of you who love those sort of ramble or reflection video, comment down below, right? Because I think it's in the long run, it's going to help you guys, but also help me because I need an outlet to sort of let it out and just let my thoughts out. And if I know a lot of people are listening to me, like at some point I feel better, right? Because all the God complex and Savior complex coming in. But anyways, please smash that like button and subscribe if you haven't subscribed yet, because I know at least 30% of you haven't subscribed, on at least I think 20% of you are subs and you're returning viewers, and we're really, really grateful for that. Because if you do 20% of 800 subs we have right now, we have at least 160 people who constantly watch our content, and I feel really grateful. And for those who haven't joined the haven't joined the Discord channel, just go join the Discord channel. I know it's a little bit messy. We're still learning the Discord channel and everything, but in a recent future, you won't know everything's gonna be great. All right, this is it for this video. See you guys on the upside. Well guys, just sorry about that, some corrections from the video. So the Chaos Fund actually made not 20 million, it's 20 billion. It's a huge difference. And maybe one of them is actually watching my video, so I want to give credit to them. If you guys really want to hear the story about them, please comment down below. All right.